Hello and welcome into this lesson. In this lesson, we'll be talking more on order blocks. So, also the order blocks is an ICT concept that talks or shows on more on the direction of order flow, or let me say that it confirms an order block shows the confirmation of a change in state of delivery in the market. So let's look at the chart. So we see that there was a time that the market printed these down close candles, confirming bearish movement. And after we had an immediate shift or change in market direction. So once this down close candle, the first one was confirmed, this green candle, now the up close candle traded up above this down close candle. This confirmed change in state of delivery, because now the change in state of delivery shifted from bearish to bullish, confirming. So let me say that if we enter down into the lower time frame here, we might see that we have break in market structures occurring in the lower time frame, so showing that the market has reversed its change of delivery from bearish now to bullish. And also these two, when we have an example of these two down three, these three down close candles, when the market confirmed a movement and a closure above it with a dynamic move, another thing, it shows now confirmation of order block. And let me say that now this, we can use also 3 consecutive candles as levels of order block. So sometimes in a price structure we have like 3 levels of an order block, depending on that specific price structure or the market structure. And sometimes we may have just one. So for example, here we had this green candle, which is this up close candle, which was traded below by this down close candle. So once we confirm this change in state of delivery, we got an immediate retest here at this the second candle. We had the market consolidated just into this up close candle, confirming now a very key and specific change in state of delivery to bearish. So this now candle confirms a retest in this order block, confirming that the market is moving lower for more sell side liquidity. So what I like to see in an order block is evidence of imbalances. So for me, I would consider, yes, this is a good order block here, but for high probability order block, I would like to see evidence of imbalances. For example, here, once this candle confirm its change in state of delivery, this one, the down close candle, once there was a confirmation on the change in state of delivery, and we left a very clear imbalance here. We had a very clear imbalance here, confirming that this candle now, this down close candle, is a high probability order block. So we see that also as we continue moving higher and higher, new imbalances were created, confirming now that these 3 consecutive candles, these bullish order blocks, now are high probability order blocks. So sometimes, another thing is, sometimes we may get a retest on this order block and sometimes we do not. And also, if you are planning to use an order block, remember you place the stop loss at the low of this order block, For example, if this is the order block that you'll be using here, just place your stop loss if you are planning to enter at the low of this order block, and the entry should be at the high. So yes, sometimes we may get that the market will use this specific area and come right into the open of this candle, the open of this order block, this don't close candle. Sometimes we may get a dig into this open of the order block, but sometimes we may not get it. Also, sometimes the market may use the middle point of the body. So if this is the body of the order block, sometimes it will use, we don't want to see, for an order block, we don't want to see a closure below the middle point of this body, the market coming back into it and closing below with bodies. So the bodies should be above this middle point of this order block. If you see us, or if you see the market going right into it and closing below, then there is a high probability that that trade is off, or the order flow that you had anticipated is also off. So as I said, a high probability order block is the one that has an evidence of an imbalance. So let us look at another example. Another thing is in gold you find order blocks in every time frame. So you just have to understand the market structure and order flow for you to be able to use this order block. Also, this is an order block. This one, why? This is a bullish order block. Why? Because there is a confirmation in the change in state of delivery to bullishness. But what happens if you'd be using this as your order block to buy? So we see what I was saying actually is this. This is the body of this order block. So we see that we had a closure below even the bodies of this order block, confirming that now this order block is at very low probability, and you should probably just exit any trade that you had entered. But yeah, this candle, this is an order block, and the reason as to why probably this order block was not respected, let me say it may be as a result of the dollar index. Maybe it had hit, we had hit in the dollar index. If we had hit a key higher time frame PDRA here, then this order block will probably be not respected, will not be respected in the market, and we'll see a different use of it, and it becomes invalid for us in terms of using this as our order block. Yeah. So another thing is also here, this candle is an order block when you consider as an order block, but I don't prefer using this type of scenarios. I think I would prefer that the candle that comes to change the state of delivery in this up close candle should be just one and should come with a dynamic move. We should have a dynamic move away from this candle. Yeah, so that's my perspective on this or such scenarios of this order block. If we look at this also here, this up close candle, we got a confirmed change in state of delivery, but you can see how sluggish this movement was as we were going down. some people prefer the order block, and some people like me prefer the fair value gap. So I think I prefer the fair value gap over the order block because of yeah, I think of, after looking at it for some years, I just prefer the fair value gap, but not to invalidate the order block or anything, just my perspective. Yeah, so that's it about the order block and where to enter and where to exit. Yeah, so that's it for this lesson. You can do more examples and more interact more with the order block even in the charts.